All right. Good afternoon, everybody, and welcome to our webinar on the copper market and an update from Atico. My name is Derek McPherson. I'm the VP Mining Analysis here at Red Cloud. I have with me on the webinar today Fernando Cardozo, the CEO of Atico, and Igor Jutina, Corporate Development at Atico. The format is as follows. We're going to provide an update on the copper market and where we think it's going in the near and long term. Fernando and Igor will provide an update on Atico, and then we'll take questions live. You could send us your questions through the chat box, and thank you to those who sent us their questions beforehand. Before we get started, I'm going to handle the disclaimers and disclosures. For Atico, there may be some forward-looking statements made on this call. Direct listeners to the cautionary note on page 2 of Atico's corporate presentation, located in the investor section of the company's corporate website. For Red Cloud Klondike Strike Inc., please see the full disclaimer and disclosures on our most recent Atico note on our Rocks Talk blog on our corporate website. And I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice. Specific to Atico for Red Cloud, I've actually visited El Roble. In the last 12 months, Red Cloud's been retained under a service or advisory agreement by Atico. In the last 12 months, Red Cloud has received compensation from Atico, and Red Cloud, or a member of the Red Cloud team, has a long position in the shares of Atico. So, on to the first part of our webinar, which is a little bit of an overview on the copper market and where we here at Red Cloud think it's going. We're actually very bullish on copper, and despite sort of recent trends, short-term trends in the market, we continue to be bullish. Think that the Dow is an attractive buying opportunity, particularly over the long term. Over the long term, there's deep supply and demand fundamentals that support the market, and there's an increasing deficit as you go out a number of years, and so that should drive the copper price higher over the longer term. Over the short term, we're seeing that the China-U.S. trade war have a real impact, but I think that's actually creating a buying opportunity. Remember, China consumes about 50% of the world's copper, and hence if they're not selling their goods, they're not going to consume as much, and so that's why we're seeing this near-term impact. But I think once this gets settled out, and it should get settled out over the medium term, we're going to see copper rip, and I think we've seen that evidenced by the majors who are out chasing copper projects. We've seen it in they're investing in early-stage projects, grassroots exploration, and even taking stakes in large projects. So with the copper market looking good over the long term, we like, particularly for copper, we like companies that can, in this current market, we like companies that have the ability to weather the current storm and are potentially profitable in the current environment. We look for small-scale producers or producers in general that have the ability to weather the storm regardless of the copper price, and I think Atico fits that bill, and we'll talk a little bit about why we like Atico at the end. And the last is exploration projects these majors are going to be chasing. I think there's a lack of good copper projects out there, and I think that's something that we're seeing evidenced in the market and how companies are behaving. So, last but not least, as to why we like Atico and why we work with them. Our view is that copper doesn't actually need to go higher for Atico to go higher, and I think that's an important differentiating factor that this company has for its producing assets, and they've demonstrated over the years that they're very good at executing at their operations. The company trades sub 2 times EBITDA, and so makes an attractive valuation from that perspective, and then is able to generate free cash flow even at the current price where it sits now. And the second thing, and that what gets me excited about Atico right now in particular, is that the company has significant exploration upside, and they're actively drilling to pursue that. They've gotten the business in a position where they can spend some money on exploration, and I'm looking forward to those initial results. So that's it for the copper market and why we like Atico. And I'm going to turn it over to Fernando and Igor to talk about Atico and why they think that what's going on there with the company right now.
Thank you very much, Derek. Thank you for having us. So we're going to walk you through the Atico corporate presentation. Let's start on slide 3 of the presentation. Atico was founded by the Ganosa family. It's the same group that started Fortuna Silver Mines back in 2005. The strategy for the company is to become a leading mid-tier producer in the copper and gold space. We started the company with a project in Colombia, El Roble Mine. It's a high-grade copper and gold VMS that has been in production for over 30 years. There are a couple of interesting things about El Roble. The first one is that it's the NSR value of the ore is very, very high. So it allows us to generate a significant cash flow, even though it's a medium-scale underground operation. Another interesting fact about the Roble is that it's a VMS at the center of a large, underexplored concession that we own. As you probably know, VMSs will tend to come in clusters. So we believe there's a good opportunity to find other VMS deposits within claims company control. We've been exploring those for several years now, and we think it's a very prospective land package. So the Ganosa family that started Atico, they have a proven track record of good operators. As they're going to show as we move along the presentation, we have been able to transform El Roble from a small-scale operation to a robust mid-sized underground operation with international standards, generating good cash even at low copper prices. We have a mandate to grow the company. We believe there's a fantastic organic growth opportunity at El Roble, but we're also looking for other assets permanently. We'll talk more about that as we move along the presentation. So next slide, please. So moving to El Roble mine. El Roble is 3.5 hours southwest of the city of Medellin in Antioquia. It's one of the good places to be in Colombia. Just by the fact that El Roble has been in operation for over 30 years, it has very good infrastructure in terms of energy, access, water, labor. So it's a good setting to be thinking about a larger operation. As you can see on the bottom right-hand side of the slide, when we took over in late 2013, the company had a very small production profile. So over the years, in a relatively small time frame, we were able to increase copper production by over 12 times and gold production by over 6 times. At the same time, we were increasing the operational standards, the safety and the environmental standards. So we literally transformed the operation in only 4 years from a small scale, in some respects, artisanal mine into a robust, medium-sized underground operation, generating a strong cash flow. And that was the base of the strategy for Atico, because we needed that transformation to happen before we could start very aggressively looking for other VMS deposits using our own cash flow. So all the transformation of the company was made with the cash flows that we generated from the operation. So next slide, please. So on the financial, there we go, one more, or one less. Financial performance, there we go. So these are figures from the year ended in December 2018. We generated from the operation 15 million in cash with an all-in sustaining cost of $1.94 per pound of copper net of byproducts, and free cash flow of 10.8 million. So as you can see, the operation provides very healthy margins. So what we're doing with the funds we're generating right now It's basically exploring aggressively and looking for other assets, and we'll talk more about that in a second. Next slide, please. So we have 98 million shares outstanding. We don't have any warrants. All the options are in the hands of management and directors. The Ganoso family, along with other insiders, owns about 18% of the company. We have around 47% in the hands of institutional shareholders taking a long-term view of the company. And there's about 35% floating in the market. We have a strong working capital position as of the end of 2018. We have more than 10 million in available credit lines from local banks in Colombia. We had no long-term debt, and we had a cash position of 6 million. So we had a strong balance sheet that will allow us to actually pull the trigger on growth opportunities that we see organically and through M&A. Next slide, please. So moving from the operation and what's the operation providing and what we have been able to do, let's talk about the exploration upside now. And let's start with the exploration potential at the mine itself. So one more slide, please. So what you see on this slide is a long section of the Roble mine, and you can see the mineralized pots, if you will, that we are mining. El Roble mine is open along strike and at depth, and we are pursuing additional mineralization at the mine. So far, we have been, since we started managing El Roble, we have been very successful in replacing what we have been mining. Just to give you a sense, we started El Roble in late 2013 with 1.5 million tons of resources. We have mined over 1.2 million tons since then. And right now, our resource sits at 1.8 million tons. So we have found more than what we have mined since we started the operation. A good indicator that there is more than meets the eye in these types of deposits. And there is a reason this operation has been ongoing for over 30 years. We still believe there's opportunity to find more ore at the El Roble mine. And we are currently pursuing that, constantly pursuing that, with 2 rigs drilling underground. So the next slide, please. And beyond the Roble mine, we own 6,600 hectares surrounding the operation. What you see on the right-hand side of the slide is a geological trend, all of which is within the claims of the company. The greenish color that you see is basalt, what used to be the bottom of the ocean at some point. And the brownish color is black chert, which is the lithology that hosts the massive sulfide. That's our control. That's what we look for when we look for massive sulfide in this property. Through a geochemical and geophysical program throughout the property, we have identified 16 targets where geochemical anomalies and geophysical anomalies coincide on top of the right geology, on top of the right black chert lithology. All of those 16 targets are very interesting to us. Of course, we know not all of them are going to be massive sulfide deposits, but for sure they need to be drill tested because there is a good chance one of those or more might be a VMS deposit. Also, there is surrounding the Roble mine, which is the figure that you see at the center of the slide. There are several anomalies that we have identified very close to the mine. This is about 500 meters from the Roble mine. We are drill testing all of these targets, where we can see that there are geophysical anomalies. Again, not all of the geophysical signatures will be explained by a VMS, but there's definitely something happening in each one of those, and we need to drill test them to actually either confirm or not that it is explained by mineralization. So most of the drill program this year is going to be focused on drilling surrounding the Oroble mine in all of these targets that you see on this slide. The reason we're focusing there is, one, because of the important geophysical signature that we're seeing, and two, all of these targets are very close to the operating infrastructure. Any of these targets turn out to be mineralization that we can mine for a profit, we can very quickly be exploding from that area. So the next slide, please. Well, we do have a very robust and aggressive program when it comes to community relations and the environment. We do think that that is the way for sustainable mining, the only way for sustainable mining. We have had very good success since we implemented all of these programs starting in late 2013. We have a very good relationship with the community, and I think that will be the key for the expansion of the operation if we find additional resources that justify and warrant the continuous expansion of the mill. So some of the investment highlights that I have already mentioned. Oroble mine has been in operation for over 30 years. It has been transformed by a proven team of mine developers and operators, and has a very strong operational profile with a very good cash generation setting. It also has a lot of blue sky potential in terms of the exploration it brings with it. The 6,600 hectares, there's a lot to discover in that land package, and we believe there's potential, interesting potential for additional VMSs. On top of that, we're always looking for additional assets. We have a mandate to also grow with M&A activity. We permanently have in the pipeline 2 or 3 projects we're assessing in different stages. And we are ready to pull the trigger as soon as we find the right project that will complement Oroble. So with that, I guess we will open it for questions.
Great, and it just, I followed you guys for a long. I followed Atico since 2015, and it's been its story keeps getting better and better. Particularly as you guys continue to execute. We have opened the line to questions, and so we have the first one is, what's the timeline look like for drill results to the market?
So we're planning on drilling close to 15,000 meters, and we try to update the market on the continuous drill program once a quarter, so we can provide an idea to the market of where we're drilling and what we're seeing. Of course, if we actually intersect something material, we will immediately disclose it to the market.
And just to add to that, the first pass of the drill program that we've undertaken in the last 18 months has been scout drilling. As Fernando mentioned, this property did not have any serious exploration program prior to us getting here. And so most of the 6,300 hectare land package has been virgin exploration that we have undertaken. So we've started with the scout drill program to identify what's going on below surface, as we had a lot of information on what's going on at surface. And most of the results that we've been putting out have been results from the scout drill program to now. Only moving forward are we starting the second phase, if you will, on favorable targets and so forth.
Okay. Sticking to exploration, one of the questions that we had of the 21 sort of regional targets that you guys have looked at, have you ruled any of those out so far?
No, we have not. We have rearranged the priority of the targets relative to the results. We have only drilled 3 targets
Okay.
to the south of El Roble, Santa Anita, San Lorenzo, and the area surrounding El Roble mine, if we consider that one larger target. Those are the only 3 we have actually drilled. Of those, the only one that have decreased in terms of its importance is San Lorenzo. The reason being is that the black chert unit that hosts the massive sulfide mineralization at San Lorenzo gets thinner. That's potent. So the probability of it holding a larger massive sulfide decreases significantly. Although in that area with the scout drilling, we have intercepted some interesting gold grades. But just by the fact that the possibility of finding a larger massive sulfide deposit is less so, we have decreased the importance of that target. But at some point, we're for sure going to have to go back and try to figure out what there is in that area with the intercepts we have. But we're going to focus more on the areas where we find potential for larger deposits to be found.
As always, it's an iterative process, just re-ranking targets as you get more information.
Exactly.
If I guess this was one of the questions that we had beforehand on exploration. At what point as you're exploring these regional targets do you decide that you've spent enough money or time at it, and then look at something else to do with your capital? Is there a set number, or is it a data-driven exercise?
I don't think they're mutually exclusive, meaning that we look for additional deposits at El Roble project. At the same time, we look for other assets, other places. Now, in terms of when is the time where we are done drilling at El Roble, where I'm sitting right now, my opinion is that we are done drilling at El Roble once we have drilled all the targets that we need to drill test. That's it, because you don't want to leave one target behind and then someone else comes by and drills 7 million of high grade ore. That's not good for anyone except for the guy that finds it. So if there is something in that property, we want to find it. And if we have 17 targets that have potential to be a VMS deposit, we need to drill test all those 17 targets. And as we learn more about the property, because again, this was an underexplored large land package surrounding a VMS, there's a lot to learn about this property still. As we learn more, as we drill more targets have appeared, more interesting zones have appeared. So it's an iterative process, but I think the short answer to that question is once we have drilled all the places that can host a VMS, once we're sure there are no additional VMSs in that area, then we can move.
So, and if we look at those, following up on exploration, if we look at those 17 targets, let's make the leap and assume that you have some success, which I think you'll have, but that's an opinion, not a fact at this moment. If you have, if and when you have that success, what are the next steps for you guys? How much can you expand the mill? What do you need permits and tailings wise to go to the next step and to bring that discovery into production?
So that's a good question. It depends on where we find the deposit, right? If we find it very close to the mine and the targets that we're drilling right now, we can. Our belief is we can jump to a 2,000 ton per day operation in terms of the mill. We'll have to look for additional tailings done. One of the alternatives, one of the technical solutions If we have a larger deposit, it's dry stack. That will work very nicely in the topography that we have at the problem. So there are solutions. We're not touching those alternatives, of course, until they are justified by finding more resources. But if we do find more resources, we have the means to have a much larger operation at the problem.
That's good. I look forward to your success on the exploration side. The next question is with respect to the financials. It's a pretty detailed question, so I will read it out. But in your 2018 financials, there's $15.1 million of operating cash flow, as you say, and $11.7 million of investing cash flows, which results in about $3.4 million in free cash flow, and equal to a net income of $3.4 million. How do you derive $10 million in free cash flow? Is this a quarterly run rate or a forward-looking projection, assuming a new production level, or copper and gold prices? I guess the question is, how do you arrive at that figure in your presentation?
So for the free cash flow, we add back what is discretionary, right? Some of the exploration, for instance, would be discretionary. So we add it back as free cash flow. We can decide to use those funds somewhere else if it comes to it, or give it back to shareholders, or as it is discretionary, we consider it free cash flow, so we include it there.
Right. Okay. Looking maybe at a little bit of a higher level, does the Colombia's 2019 National Development Plan affect your royalty payments?
No, they don't. If anything, I think it helps. The National Development Plan puts an emphasis on supporting mining and looks for alternatives or ways to get the royalty payment from mining companies more efficiently into the communities where the royalty was generated. And I think that's good for the community, it's good for the mining companies, and it's good for the government. So if anything, I think it supports and promotes mining, and not the other way around.
As in the local community seeing more of a direct benefit, which is always important because they have to the operations in their backyard.
Absolutely. One of the problems we face usually is that once the royalties get to the central government, if there's not an efficient way to send them back to the communities, they just get lost. So if they actually, and I hope they do, find this more efficient way to invest those royalties in the communities directly, I think it will be a very important step and very beneficial for the Colombian mining sector.
So the next question relates to go back to free cash flow because you guys have so much of it. What is your plan for the free cash flow that remains after you pay for your exploration program? Obviously, it's your balance sheet is going to continue to improve from here.
Well, we certainly hope so. Igor, you want to tackle this one?
Yeah, absolutely. So, Derek, as Fernando mentioned earlier in his presentation, our strategy is to grow not only organically but also through M&A. And as the market has been deteriorating in the space, we are seeing ample of opportunity. In fact, much more opportunity in the last 12 to 18 months, more so than we've seen in the previous or preceding months to that. And so we think that a good use of these funds would be to look for another accretive asset to add to the portfolio to complement the El Roble mine and return or have good returns for shareholders in that way.
Okay. And I guess sticking to that M&A theme, one of the questions that we had beforehand was, what countries would you consider for M&A?
Well, we are very much focused on Latin America. That's our natural hunting grounds. There are certain countries where we just won't go to, the usual suspects that everyone knows about. And there are other jurisdictions that we consider to be more challenging or to have a higher risk profile for a mining operation. In those jurisdictions, we have a higher threshold for the profitability of the operation, the returns the operation have to provide to shareholders. But having said that, we basically look for assets pretty much everywhere in Latin America.
That's good. And I guess what does, if you were looking out to what that ideal target looks like, not that you have to give away the secret here, but what are the things that you're looking for? Obviously, with free cash flow, you have the ability to move something ahead with the cash that you have the ability to move something ahead very quickly once you get your hands on it. Is there a specific style that you're looking for, or a specific state of development, or is it sort of, it depends on the opportunity?
So what we're mostly focused on, Derek, is a project that has at least a discovery. Of course, ideally, if we can find a project that has an operating mine that's being mismanaged with plenty of geological potential, that would be ideal, but those are not easy to find. And so what we're looking for, again, is for something with at least a discovery. And the way that we assess if it's in our sweet spot or not, we focus on margin. And for us, the key criteria is that the operating cost is half the NSR value per ton. And as Fernando mentioned earlier, depending on the jurisdiction, that criteria is even more rigorous if the risks are higher. So, that could be a lower grade deposit, but that has low operating costs, or in the case if it's a, let's say, deeper underground mine with higher operating costs, then the NSR value per ton has to be much higher for us to be interested in such a target.
To add on to what Igor is saying, we definitely shy away from greenfields exploration. We're not structured as an exploration company. So we look for primarily for projects that are post-discovery, preferably closer to development, construction, or in operation possible. Although we are focused on copper and gold, we can be a bit flexible on the commodity if the project is really interesting, and it has to provide, as Igor mentioned, high margin. Our margin will look different if we're talking about an open pit or an underground mine, but it has to have according to the criteria that we use, it has to be high margin. As operators, we wanna own and operate an asset that we're pretty sure will continue generating positive cash flow even in the down cycle.
Yeah, that's the ideal goal, is to have it work in both the up and the down, because as we know, commodities are cyclical, and it's important to play to your strengths. You know what you're good at, and you've demonstrated the operating strength has been demonstrated. So sticking to that is always important. One more question from the line, if you will. In your 2018 MD&A, I see a current mill capacity of 800 tons per day and a throughput of about the same, i.e. at capacity. Is this correct? And then the second part of the question is, if your exploration efforts are successful, can you give any color on the estimated cost of a mill expansion, say to double the current capacity?
Sure. So let's start first with the capacity. We're actually able to run the mill at about 900 tons per day. And we have stabilized production of between 850 and 860 tons per day currently. And with some minor changes and solving some bottlenecks, we can get to 1,200 tons per day with little effort. And as we have been investing in the capacity of the mill. Just for the audience, we started the operation back in late 2013 with a capacity of around 300 tons per day. So we invested in increasing the capacity of the mill to the current 900 tons per day. And as we invested in different parts of the mill, we did overinvest on purpose. So what we have remaining right now is some bottlenecks that we can, by solving those, we can get to 1,200 tons per day without much investment. Now, what it will take to get to, let's say, 1,500 tons per day, I'll say we're looking at a very conservative figure of about 5 to 7 million, which is very low for increasing the capex that size to that size of a mill. And again, the reason being is that we already have a lot of infrastructure in place to operate at a higher rate. For instance, at the mine. The main infrastructure at the mine is prepared to run at over 2,000 tons per day. We made that investment since day one. So at the mine, all we will have to do is to increase the number of phases we will have at any given time. And one of the major investments at the mill will be additional flotation space and another mill. So basically, we are well suited to increase capacity again if the exploration success warrants it, justifies it. This figure I gave you is for the mine and the mill. It does not include the tailings dam. The tailings dam will require probably another 2 to 3 million for a larger capacity mill.
Okay. And then sticking to the mill, one additional question on recoveries. Copper recoveries are pretty high at 90%, but gold recoveries are steady at about 60%. What are the metallurgical considerations that result in this recovery, and is there any way to increase it, and if so, at what cost?
Well, the short answer is there is a way to increase it, but we just find that the economical point where we are, the most efficient economical point is right where we are now. And we have tried to improve it throughout the years, and we only had limited success with that. And there is of course an explanation to that. Let me start by saying that we could get to 80% gold recovery if we wanted to. It's technically feasible, but the copper content in the concentrate runs inversely to the gold recovery, meaning the more you want to recover the gold, the less copper content you're going to have in the concentrate, and that has a cost. So these are two curves that are moving in opposite directions, and you just need to find the point where you are better off economically, and the point that we right now, because that moves depending on prices, for instance, and other variables. But right now, about 93% copper recovery, about 22% copper content in the concentrate, and about 62% gold recovery is the most efficient economic point for the El Roble mill. We have studied several different other ways to increase the gold recovery, including additional steps to recover gold from the after the flotation process, or after the copper flotation process, and most of them are not economical. We continue to look for additional ways, but again, so far we are only limited access.
Okay, and our next question is about the recent strike. Have you recovered operationally from that at this point?
So Derek, just to go back, prior to the strike, we implemented a contingency plan to keep key areas of the operation in a ready state, if you will. And once the strike had ended, we were able to quickly resume operations, of course, with some minor challenges at the mill. So with that, we've made adjustments to our year guidance that we gave at the start of the year, and we will make every best effort to exceed these adjustments and achieve as close to the original guidance as possible.
And to add on to what Igor was mentioning, we very quickly, I believe, according to my own criteria, we have been able to get to steady state operational level again after the strike ended. So we're currently running the mill at full capacity, and we're at full production. So again, as Igor mentioned, the challenge now until the end of the year is to see how we can compensate or make up for some of the lost production as much as we can.
Yeah, that's good. I know the strikes can be tough to recover from, so it's good that it ramped up quickly. Well, we do have a couple more questions. I think it's an appropriate moment to cut it off here. If we didn't get to your question, or you come up, if any of our listeners, or if you come up with a question afterwards that you'd like to ask, feel free to email us, and we'll get that question answered for you. So thank you, everybody, for your attention, and thank you for participating in today's webinar. And we hope to speak to you again soon. Thank you.
Thank you.
Thank you very much.